What's up? Welcome everyone to the second update of this channel. So this is week number 2 of the Retiring Early Challenge. I'm going to give you quite a few updates, but first I'm going to say I've had people reach out to me before and say, "Hey, don't spoil your vlogs. Don't tell me what happened before you get into like the episode itself." So if you're one of those people who does not want to know what happens in the upcoming poker vlog, you might need to tune out for a second because I'm going to give you the results from this week. All right, now that you've been warned, now that you've had a chance, let's talk about it. So, went out and played one session. We'll get into those results in just a moment here, but we did quite well. So, I did. Let's see. Why is my mouse dead? There we go. All right. So let me go ahead and bring up what we did this week. We had a win of $1,045 playing at the Pearl. And I will show you my bankroll here. Let me go ahead and, whoops, wrong screen. A little new to this whole live streaming thing, guys. I don't do it all the time. All right, so I've only got one session to show you here so far, but great news, everybody. We are we are making $209 an hour. We're set. We made it. We've arrived. If I can continue to make $209 per hour, I'm unstoppable. I'm ready to retire today. No, this is obviously things went very well and definitely above average. You guys saw, if you saw the last live stream, making somewhere in the range of like 68-ish dollars an hour. So this is way above definitely some positive variance. But that's where we're at so far. We've got $1,045, and that was played over about 5 hours at the Pearl. So this is ever since we started our bankroll early retirement challenge, July 21st. I've got it filtered. So this is all you can see. Any future sessions are going to get added to this amount. But so far, nice win. We add half of that to the retirement account. So let me get back over here, and I'm going to make a change on my screen. Give me just a second. And I'm going to bring up something I want to talk about with you guys, which is we had a big week in investing. So we had some really interesting stuff going on, lots of earnings announcements. And one of the things that obviously came in the middle of the week here, hopefully you can see this. Let me make sure you can see this. Yeah, there we go. All right. So one of the things that came up was the Fed announcement. They're going to make a rate change. And I wanted to talk about this because they've been talking for quite a while of, hey, we're going to try for this soft landing. We're going to try to make the economy's, we're going to reduce inflation, and then everything's just going to settle into this perfect state based on history. Now, history won't predict perfectly what's going to happen. It doesn't repeat. They say it doesn't repeat, it rhymes. Let's just look at maybe what some likelihoods would be, so we can just have an idea of what's potentially ahead of us. This is from the Federal Reserve. This is from their website. And I wanted to show you some, let me silence my phone here, my mistake. I wanted to show you some data that's interesting. So this is the federal funds rate. They're talking about kind of getting inflation under control versus the green line is the unemployment rate. Now the red is in here, personal consumption. We're not going to focus on that as much. But here's what I wanted to show you. We're going along. This is back like the tech bubble. And you can see that the Fed is raising rates, gets up to 6.5, and then stalls for about 6 months or so. And then things start to fall apart in the economy. And when it does, then the rates start going back down. The Fed says, hey, we're going to make things more comfortable. We're going to ease rates and kind of try to stimulate this economy. And as it does, you can see the inverse correlation there as unemployment rises during that crash, right? So we've got a rate that goes for a while. It flattens out. It's steepening, flattens out. And then we have this crash where they have to do something. Something breaks in the economy, and we got to make a change. And so here's that change, right? You see unemployment rates rise, and you see the Fed rate fall. So now this is going into the housing crisis. We see, again, we're trying to get rates back to something more normal for like a historical norm. And we get up to 5.25. We hold it there for, let's see, I think it's almost a year this time. So July of 06. To July of 07, we've got a 5.25 rate. And then all of a sudden, things start to fall apart. The Fed rate comes crashing down to try to stimulate the economy as it goes in the toilet, and unemployment rises a huge amount. Now we'll get to COVID. Obviously, COVID a little different. But you can see that preceding COVID, again, rates rising, things coming up, and then all of a sudden things start falling apart. Huge spike in unemployment, different scenario, but it didn't get too far away from what we've had. Unemployment starts to come back down. Fed rate starts to rise again. And here's where we find ourselves, where we're at basically a 5%, just above a 5% base rate. And we've just had a hike. And so if we were just to guess what's coming next, and we don't know for sure, but if we were to guess what's coming next, I think there's a reasonable chance that we can say we're probably going to see some unemployment spike in the near future and something break in the economy. So I've been taking that position in my portfolio, and I'm going to show it to you kind of what the results were, but you're going to see that, hey, there's this, you're going to see that my portfolio, even though I added money, ends up being down slightly overall. And that's because I'm playing a little bit of a short position that I started when we started to get these rumblings, and maybe there was some problems in the banking system, and I just felt like this might be the beginning of those rates coming up and then something falling apart. So it definitely has not paid off yet, and I don't know if it will. I'm not suggesting. By the way, I didn't start out by saying this, but nothing you see here today is investing advice. Do your own research. You know the spiel. But let me go ahead and show you where the account is at. So let's get into this account. And as of our last update on July 21st, we had $8,250.68. As of right now, we've got $8,717.37. So we've increased, but not by a factor larger than the money that we added. So I added that $520 win right here, and then we've come down just a little bit throughout this week. So that's where the account is at. Now, what I'm going to do is I want to take some time and talk about a few stocks that are standing out and kind of what's ahead. What are we looking at? I only purchased one stock this week, and I was planning on buying more, but with the earnings week being here and the Fed announcement, I thought this is a week that has the potential to be really volatile and to go all over the place. And I don't know that I want to put my money in right away without kind of seeing how things are received. So I've been fairly hands off, only buying one stock, and I'm going to tell you what that is. But let's go ahead and talk about kind of the strategy beyond just the Fed decision and what I'm doing with my whole portfolio. So I am trying to take this really like defensive stance where I've got a lot of these dividend paying stocks. And then I'm playing the volatility index. I've got a little bit of a short position. And what I'm trying to do here is set myself up so that I've got companies that are going to be recession proof. The reason I showed you that whole Fed chart is that I think we're on the cusp of something happening in the near future. And when it does, I want companies that are going to be resilient. So what I'm looking at are things that Americans don't give up easily. So companies with a lot of brand loyalty, you're going to see that throughout a lot of the stocks that we talk about in my portfolio, whether that is some of the ones we're going to discuss today are Pepsi, McDonald's, Union Pacific, and Microchip Technology. So those are all companies that I don't think are going to be crushed if there's some kind of a recession. We'll get into each of them really quick, but let's go ahead and we're going to start with McDonald's. Now I'm going to give you a really quick backstory on me. So my mom, when she was pregnant with me, ate McDonald's she craved McDonald's French fries and ate them constantly. And then when I was a kid, we had a friend who was like a neighbor of ours, and we would go hang out together and spend time. So our moms would talk, go to McDonald's, and we lived in Seattle, so it rained all the time. So we would play at this indoor playground at McDonald's. So like once a week, we're having a Happy Meal, right? So I'm pretty sure at this point, I'm like probably 90% mummified. Like I think I'm already embalmed if I was to die tomorrow. So anyway, let's get into McDonald's. It's not a company that I am currently loyal to as far as like I'm not buying McDonald's on a regular basis, but what they've done as a company is they've established brand loyalty in a way that I think is really solid and gives them this resilience if we do have some kind of economic event. First, let's look at the chart really quick. All right, so let's go back the last 5 years, and you can just see this strong trend moving up. I like where they're going. McDonald's it's like no matter where you go in the country, you're going to get the same thing. people count on whatever it is. Maybe it's the sausage McMuffin or their Big Mac or whatever it is that they like. They know that they can get it, and it's going to be the same over and over and over again. So McDonald's has done a really good job of kind of building that brand loyalty, but they also are constantly, their menu changes, they adapt things. The McRib comes in and people go crazy for it. So they've just done a good job of kind of continually putting something out there that the public is interested in, and kind of staying with the pulse. The value of the brand loyalty is they can raise their prices a little bit and people aren't going to go away. They're not going to stop eating McDonald's because the prices went up slightly. And that's where I think there's a lot of value in this company. They're a strong dividend payer, which all these companies I'm going to show you are. So strong dividend increase. And we won't go into too much detail on McDonald's, but this is one of the companies I'm watching, and probably one of the ones I'll be buying over the next week or two, depending on what the market does. I'm definitely looking to buy this one in the near future. Let's talk about another one, Union Pacific. So, by the way, McDonald's in earnings week, earnings went well. They've projected to open another 1,400 stores this year, and I just think they're deploying capital well. They're a company that I definitely like. Union Pacific. So this one, the trend is a little rockier, but this is something that, again, I just don't see it going away. I don't see the railroad not existing during a recession, right? It's going to be hard for us to imagine a world where there's no longer need for a railroad. So strong trend here. It does break and you go into this downward channel. So this is not something that we necessarily want to see. It did break up on some very positive news. They got their earnings weren't great necessarily, but they had a CEO change, so more of a speculative positive news. But there's just a lot of optimism that things are going to be kind of turned around on that CEO change. So we did see a big spike. If I put that on a 1 month, you can see that we took a huge jump in one day. And so a lot of optimism there. But this is one that, again, just strong, resilient, dividends look good, everything going up there. And so the income probably going to be strong even in the near future, even if something happens. Let's take a look at microchip technology. Now, this is a tech company. They're not in the AI space as much. So they're making microchips, but they're not necessarily in the AI space like a lot of the ones that have really blown up recently. What they're doing is they're really involved in the automotive side. And now we know that there was a shortage for a long time where automotive manufacturers were struggling to get chips. This is one of the people they're going to be dealing with, and they're advancing some new stuff. You can see in their R&D, there's something I really like. They're investing a lot of money into their R&D, so that's good as far as their expenses go. And again, this price trend really, I think, pretty strong here. You can see that it's just working its way up. The thing I really want to see is I want to see we're kind of testing this all-time high here. I'd like to see it break through and then stay above for a little while. That would be a really positive thing for me to consider buying more. And I'm not going to get too into the weeds on this one. The one I want to focus on, and the one that I made a purchase on this week, was Pepsi. And again, Pepsi's going to have a strong trend here. Let's go ahead and look at the price trend. And this is probably the most stable trend. If you were to draw a line here, go to the top. Again, I'm not a technical analysis guy. I don't pretend to be, but if you're just to draw those lines, you can see that it's just trading in this channel, kind of bumping up and down as it goes. And I just think there's a lot of positive momentum there. You're not seeing it like really testing the bottom line too much. And so I think we're just kind of moving along steadily. Now, if you don't know much about Pepsi, Pepsi owns, not before I invested in them, I didn't realize this, but they own like Frito-Lay, they own Quaker Oats. So they've got more than just the beverage sector to support them. And I think that's really positive for them. I don't think you're going to see them moving away from, having cash flow. If something does go wrong, it might diminish a little bit. But again, we have strong dividend trend. And if we go to the shares outstanding, you can see that those are dropping, which is always what we want to see. Revenues strong here, moving up as we go. So just a lot of really positive things on Pepsi. And because I saw less volatility during their earnings announcement, we didn't see a huge spike of speculation. We didn't see a huge drop. And they've got this strong trend. I decided this is the one I'm going to go ahead and add to. So at this point, that's the share that I've added. I've got about, you can see, if we go back to the account, I've got about $420 still ready to deploy that's kind of sitting on the sidelines. And I'll be making my decision on that next week. So we'll see how that goes. As far as poker moving forward, I'm going to be playing tonight. So I should be getting out at least for a little bit today and then possibly tomorrow as well. We're going to see how things go. We're going to try to hit the tables, get some more earnings, add some more cash to this account, and then we'll be buying some more stocks. We'll see what happens here. I'm really curious to see how the markets respond overall. I don't know if the Fed is one of the big questions in my mind right now is the Fed done raising rates? And my guess, based on our trend charts, based on what's happened before, is if they do hike it all, maybe one more. But I feel like we've kind of hit this threshold. All the data coming in is, oh, everything's under control, everything's great, everything's wonderful, which again we've done in the past. That's usually when they pause, things go flat, and then something will break. So we'll see. We might be totally wrong. I just wanted to share that information with you because I found it pretty valuable in informing what I'm doing. And again, I'm not winning as of right now. I need the news to change and I need things to go the other way for that bet to be right. In the meantime, just going to keep buying strong companies that pay a good dividend and having some dry powder available on the sidelines so that if everything does fall apart, I can come in and start making some buys. All right. Well, really quick, I think that's going to be. Oh, I did just want to talk about kind of that resiliency aspect one more time. One more thing to kind of think through is with like if somebody is to lose a large portion of their income, right? They go from a job that they like to, let's say, they're on unemployment for a while, or they take a lesser job because they got laid off of their primary job. I think when you have that expendable income that changes, we have to think about what are people still going to buy. And I think with these brands, something I didn't really mention and meant to was I think like something like Pepsi, people are going to have a hard time stop if you regularly drink Pepsi or one of their brands that they make, or you eat Frito-Lay chips or whatever, you probably have some kind of a routine of eating those or drinking those beverages or whatever. And or if you're a McDonald's customer, you probably, my father-in-law loved to go get their senior cup of coffee, right? It was cheap and he liked it. So he was consistently there. And then do you make an extra purchase? Sure, you're there already, so you're going to get a sandwich or whatever. So I think just that repetition and building those in, and even when money gets a little bit tight, there are things that people aren't going to give up, and I think these brands kind of all follow that. I don't think you're ever going to get away from microprocessing and industrial applications and things like that. I don't think you're going to get away from a railroad, and I don't think you're going to get away from this consumption. Now they'll all take a hit. I would imagine they'll all take a hit, but these are ones that should be resilient. And even if they do take a hit, I think they'll stick around and then eventually bounce back. So that's how we made those decisions. And as we're signing off here, I just want to say thanks to Jinx who reached out and said hi. You've been supporting the channel, appreciate you. Was able to get to meet you finally at the Pearl. So thanks for saying hey. If you're out there and I've never met you before and you happen to know who I am, feel free to say hi. It's always nice to meet somebody who might know who I am, and I'm not too. I don't want to ever get in a position where I don't have time to meet somebody or something like that. So I always have that in my head when I see somebody that I recognize from YouTube. It's happened a few times. I'm always like, oh, I'm not sure that they want to be bothered. Feel free to say hi. I don't mind at all. Anyway, thanks for being here. Thanks for hanging out. That's the update for this week. I'll keep you posted. Going to play tonight and tomorrow, and I'll let you know how it goes. Hopefully we can post some more good results, and then I'll be updating you with what we purchase or what we are looking at as far as stocks go starting next week. All right. Thanks for being here. Have a great week, and I'll talk to you again soon.